Okay. Now see, what are the various engagements that you can be asked to do? First engagement is obviously audit, right? Because most of our time studying audit would be spent on understanding what is the gas literature that is given to you for understanding how do you do the audit. So what is audit? Audit is very easy. I have a set of statements which are prepared in accordance with GAAP generally, but there can be others. We'll see the exception, right? First time, I'm going to just concentrate on the norm. The exceptions we will go later, right? So what we're doing is you have given me a set of statements that have been prepared using GAAP, and I am reviewing those statements. And at the end of whatever tenure that I'm spending with my client, I'm coming up with an audit report that says, I think, in my opinion, because of the work that I did and because of the evidence. Remember, an auditor's job is like a lawyer's job, guys. Nobody would talk to you. People would know what you've done by the evidence that you produce to them, right? So you come up with a set of evidence and then you say, see, I did the work according to this, and this is the evidence that I gathered. And according to that evidence, I can give you an opinion which says that yes, your accounts are fairly presented. So what is the framework? So start with what you had to adhere to make those statements. GAAP. So it was your job to prepare the accounts as far as GAAP is concerned. You gave me the accounts. You gave me access to all your resources so that I can check this thoroughly. I did my job following the process that gas or whatever hierarchy I've been following has been given to me. And I have collected evidence. And on the basis of that evidence, I can come up and say. So what you did, you gave me a set of financials prepared according to what? According to a framework. I applied that framework. I checked your financial statements, and you also gave me access to resources, to people, to your books, right? If you don't give me access to your SAP, I cannot go and see whether what you've given me is correct or not, right? And then what I did with all of these resources at my disposal and using, now see, the keywords are very important in audit, guys. The keywords are professional skepticism and professional judgment. These are high sounding words, but it does have a significance. It means that I'm not going to believe whatever you give me. I'm going to take it with a pinch of salt because I have been on the other side and I know what you do to tweak your accounts. So every time you give me a set of financials, that is the end report card that you want to give to your end users. And I'm going to go and look at it and say, no, something is not good. It's my job to find out what is not good. So when I am doing that, I'm applying a kind of a detective's mindset, which says that I'm skeptical about what you've given me. And according to the work that I have been doing for the last so many years in the industries that I've worked in and the clients that I've handled, I'm going to use all of that professional judgment. See, I'm spending 1.5 painful years of my life doing CPA. So I know theory very well. Then I'm working, and not just working, I've been working for the last so many years. I'm using all of that judgment to do what? To do my work. According to what? You can't do the work according to what you want. At least there is a bare minimum standard that gas has given. In accordance with what? In accordance with gas. So this is the framework for auditors. This is the framework for accountants, right? This is the framework for auditors. So I've done my work according to the framework that has been given to me. I collected evidence. So yes, the work was good enough for me to come up with evidential proof. And now, the keyword is opinion. Now I'm giving you my opinion on what? Whether these financials that you gave me, whether they have been prepared in accordance with this framework that you use. So you told me that you have used GAAP. You gave me a set of financials. I did my work. I collected data. I have evidence to form an opinion. And according to that opinion, I'm going to tell you whether the financials you gave me, the balance sheet, the income statement, the cash flows, the statement of changes in owner's equity, and the notes, whether all of these have been prepared in accordance with GAAP, not with 100% surety. Because see, I am just going to you for 5 months, right? I am giving you something which is called a reasonable assurance. I cannot give you an absolute assurance. Why? Because I'm not a donkey. I'm not going to come up and say, no, nothing is wrong. But I will say, according to whatever data you have given me and according to some inherent limitations of audit. Why? I'm there for a limited time. You are the person who's authorizing gap. You are the person who's preparing the accounts. What if you are unfair? What if you have cooked up a fraud somewhere and tried to cover it up and there are no trails? I will try my level best to uncover them, but you know the nature of my work. So there may be some loopholes, but on the whole, I have tried to minimize the risk of your financials being misstated. So the key word is misstated, materially misstated, which means what? In very simple words, it means that when you give your accounts, which is showing a revenue of, let's say, 10 million and a top and a bottom line of, let's say, 5 million, and you're telling me your net worth is, let's say, 20 million, I can actually say that yes, it apparently looks correct and it does not seem as if you are materially misstated. So, what I do the entire process. That process is called auditing, and then I give you my opinion. My opinion. Why? Because I'm signing with my license number, right? So if it is proven later that what I did was wrong, incorrect, unfair, untrue, unethical, then the profession has a role, and the profession can just revoke my license. So my license is at stake, right? So this entire job is done by what? When you go later, you will see there will be a set of standards called SAS, Statements of Auditing Standards. Now, see what happened was 2008 was a big drawback for US. Why? Because that was a time in subprime crisis when the Enron fiasco happened. And when Enron happened, American corporate culture was taken in for a big shock because they had been depending on the audit profession, the accounting profession to take care of this credibility role. And suddenly they thought, no, we cannot do it anymore. I mean, I think you guys are aware that India is also in that flux right now with Satyam and later on with so many problems happening. Nowadays, you will see earlier we never used to have auditors coming up and saying, no, I don't want to be associated with this client. But we saw how Byju's, the auditors just exited. They said, no, I don't want to do it. Deloitte left Stray. Why? Because they didn't want to get involved with the problems. Why? Because now the accounting profession is feeling the brunt. So what happened in the US? They separated the profession and they said, no, I don't trust the profession anymore. So you go ahead. So earlier there was just AICPA, and AICPA used to make standards, and those standards used to be called the SAS standards. But then the corporate, the SEC, the watchdog for the people who have taken and gone and requested the general public to give you money, suddenly said SEC got very wary. They said, no, I cannot trust the profession to do this anymore. I'm going to take it in my hands. So what they did, they set up a board. That board came to be known as Public Company Accounting Oversight Board, the PCAOB. And they said, nothing doing. I'm going to see who is going to be the auditor. So I'm going to control who can audit the issuers. Remember, if it's SEC, I'm only bothered with issuers. Why? Because these are people who have taken a lot more money from the general public, and nobody has a clue of what these guys are doing with your money except for the financial reports that you're giving them. So I said at first go, I said that, see, I want to ensure that if you are a CPA who's wanting to audit the issuers, you have to come to me and I will tell you whether you're capable of coming. And so I'm going to do that credibility check for you before I give you the authority to go and audit an issuer. And then what I said, I'm not interested in AICPA standards anymore. So the day when they took over this entire thing, they adopted the AICPA standards. And now, slowly, they are tweaking it a little bit and then they are forming their own standards. So, now understand what we are doing. We are doing AICPA, right? Our governing authority is AICPA. So, now what is the situation? The SAS is to be followed only by non issuers. And if you are an issuer, then you go to something called peekaboo standards. The Public company accounting oversight boards have come up with their set of standards which will be applicable for issuers. Now, what is important to know is that PCAO still have accountants, but at the end of the day, AICPA is the authority, right? Because they are the people who have been professionals. Like in India, if ICAI is a professional body for managing the chartered accountants. Tomorrow, if you segregate it, then also the professional expertise lies with ICAI, right? So what we are doing is so gas term is used actually for non-issuer standards. Generally, we don't use the term gas for issuer standards. We call them peekaboo standards, right? So what we will be learning is gas. And in case if there is any delta between gas and peekaboo, then we'll just touch upon that. Why? Because peekaboo is more or less similar to gas. They have tried to make it a little easier for small companies, a little difficult for bigger companies, but typically it is gas applied in a particular situation. So our premise when we are doing auditing would be gas, but wherever peekaboo is relevant and wherever there is a delta, we are going to discuss that delta. Is this clear? Everybody, is this clear? Okay, so that's the first thing. So earlier we used to have this research standards. You will still have it, and I will strongly suggest that you guys should explore a little bit so that you know what is the hierarchy. So people who are everybody right today, Wiley, Becker, everybody has given you the research. It's a very good thing because I don't think they're going to give it to you later. You know when the new syllabus applies, I think they're going to revoke the entire thing because they have done away with the research questions, but you get a very good idea. So what my suggestion is today when you go back home, when you start your day and when you start to study, you just go to that research tab and you see this. You will see that all the gas or non-issuer standards are in the form of AUC. Now, why C? What happened was after this entire thing was being considered, there was a time when international convergence was being thought about. If you would recall, at that point of time, we were students in India and we were studying for CA. So there was a time when suddenly our auditing standards changed, right? The Indian auditing. So everywhere in the world, auditing standards were changing. And actually, what had happened was there was a set of standards called the ISAs. The International Standards on Auditing got published, and every country in the world were trying to, align their standards to the ISA standards. That of time, AICPA took a convergence project, clarifying project. Okay, so they did something called a clarifying project. What was that? They wanted to simplify their standards. They wanted to make it easier for the auditors to understand. So that's the reason why now all the SAS which are issued are in the hierarchy of AUC. C is the clarified standards. Okay. So with this, so this is the first range of service that an auditor can do. Now, see, we've changed the word. Now we no longer use auditor. We use the word accountant. There are various other work which are not related to audit, but that is being done only for non-issuers. So smaller companies, when an accountant is engaged to do a work which may not be giving an opinion, but something lower than that, right? Say for instance, I'm a startup and I want somebody to prepare my accounts on an ongoing basis, and then I want this guy to give me a report. Why? Because making account is one thing, but then if I want to raise loan from a bank, then the bank asks me for a report. Then I need a signed report from that accountant, right? So what are those other work that an accountant can do, which are not audit and which are not related to big companies, which are related to small companies? Those are covered in SAR, Statement on Standards for Accounting and Review Services. We call them A, R, and C. Every standard is clarified now, so you will see the suffix C added to all the standards. Now, what are the various engagements? We are going to pick this up after we have understood full audit, guys, okay? But it's very important to know what are the various other engagements that CPA can be asked to. One is called the normal preparation. What is that? Now, I start my practice as a CPA. So imagine if you guys, once you clear CPA, you want to start practicing. You set up your own firm and then you start doing the work. So first range of work is when somebody comes up and says, see, I have a motamoti, I've done everything. I'm a cash basis taxpayer, but I want you to do a depreciation run every week, every end of the week. And if there are any adjusting entries that you have to pass, please do that at the end of every month, so that there is a report that I have a basic financial statement. As a CPA, I agree. See, boss, I'm not giving you any report. I'm just helping you prepare your accounts. My name will not come anywhere. No report will be issued. Are you okay with it? Says okay. That's the first level of service, which is called preparation. Can I do it the way I want? Typically, yes, but still there is a standard given by the AICPA that governs the preparation engagements. Now this guy who's not only just wants you to prepare the accounts, now he wants to have a bank loan. Bank wants for a report, and that report needs to have a CPA signature that yes, whatever you are talking about is true. So now I go back to my CPA and I say, boss, I need a report. CPA says, okay, I'll give you a report. saying that, yes, I am the one who has helped you prepare the accounts. But I'm not going to tell you that this report is correct. Why? Because I did not make your journal entry. I just helped you pass the adjusting entries. I'm not going to give you any assurance. I'm just going to say that you gave me certain data and I just used that data and I presented it in the format that GAP would want me to format. That's it. I'm not going to give you whether that report is correct, wrong. I'm not going to give you any assurance, no opinion. I'm not going to give you any opinion. Are you okay with it? I say, okay, that's better than not having anything. My bank is okay with it. I say, okay, let's go ahead. That engagement is called the compilation engagement. So typically preparation and compilation, the work that you do is the same. The only delta is in one, the report is issued. In the other, there are no reports which are issued. Then we go a little bit ahead. So you're still a small company. You still can't afford a full-time CPA, but you still want his help. So you say, boss, now the bank is telling me that yes, compilation is okay, but kuch to do, at least some kind of an assurance you give me that no, your financials are not misstated. I'm not asking you to get into a review, to a full-blown examination or an audit, but at least you give me an assurance by a CPA saying that I have looked through it and nothing looks apparently out of place. CPA says, okay, I can do that. But I'm not going to say, in my opinion, your financials are true and fair. I mean, the words are not used anymore. The words that I use currently is, in my opinion, the financials are presented fairly in accordance with GAAP. I'm not going to do that. So what are you permitted to do? So AICPA came up and said, you can say that I have reviewed your statements and nothing came to my knowledge that made me to believe that the financials are misstated, material. But remember, this is a review, so I may be wrong. What I did was a drone kind of a thing. I did not go for audit. I did not do any audit procedures. I just did a cursory review, something like a variance analysis. This was the thing, this was the thing, this was the thing, this was the thing. Okay, there was a problem. What did you do to fix that problem? Oh, you did this to fix the problem. Apparently, it looks correct. So what I have done is a review. That's not an audit. I'm not giving you any assurance, but I don't mind giving you something which is called a limited or a negative. So there is a term that we use. It is also called limited assurance. So I just overviewed your accounts, something like a drone kind of a thing. Review, right? I just did the something like comparison. I put this times figure with last time's figure. So some what you do in your interim accounts, guys. If you have time, just go and pick up any interim. So quarterlies come, right? So when you look at a quarterly report, so do that work. So one thing I want you to do at the end of this exercise is I want you to go to your research tab and I want you to see for audit what are the literatures possible. So you will see the ARC and you will see the AUC. So you will know what is the hierarchy that we're talking about. Then I want you to do what? Then I want you to pick up two things. And this is going to be applicable throughout the audit sessions. I want you to pick up one, I want you to pick up the Form 10K of at least three companies. Just go and pick up a Form 10K. I asked you to do that in GAP. If you would have done it, you still would have the Form 10Ks. Now I want you to look at the auditor's report. Okay. And of any two, three companies. And then I want you to go and look at the quarterly report. So this is Form 10K and I want you to look at Form 10Q of the same company and just see how the wordings of the report change. You will see that at the top end of the report for a review, they will write unaudited. Sorry, you will be seeing that it will be written unaudited financial statement. So read the review report of the auditor, guys, not of the management. The auditor in the 10Qs, read the review report of the auditor for 10K. And have a look at the research tab to see what are these standards that I'm talking about. Do that. It is good for you. You will start understanding what we are and you will start relating to what is being taught in the class. Okay. Then we have one more standard. That's called SSAE standards, the Statement on Standards for Attestation Engagements. Now, see, the word attest means an opinion has been given to you. That means, very literally speaking, I'm a CA. So there are so many people who come to me and say, see, we can attest, right? We can come up and say, okay, I saw your originals, I saw your Xerox, and I give you an attestation that yes, this is conforming to the original. What is attest? It gives credibility. my license number has to be written because it has to be at stake, right? Because you are owning up that this is equal to this. So the word attached itself means that there is some kind of an opinion that is given. Now, attached is a word where you use, and remember, the moment you have an opinion, then you switch on to the role of an auditor or a CPA and not an accountant anymore. Is when a CPA would give you an assurance. The term assurance means that you're giving an opinion about what? About something which is not your financial statements, the historical P&L, balance sheet, cash flows, something else. But what you're doing is what you do in audit. I am still examining. So we use the word examination. Why? Because we're doing the same thing, but we're doing it for accounts which are not historical financial statements. So it's audit, but of accounts which are not your financials. That's called attestation engagements. Here, the prefix that you will use in the standard is ATC, attest, review, audit. Can you understand? AR, review, AU, audit, AT, attest. Okay? Here you have certain engagements. One is called examination, where you come up with an opinion. There is no negative or limited action. You have to say, I did the work. This is what you asked me to do. I did the work, and according to me, in my opinion, so whatever framework you gave me, whatever accounts you asked me to do, whether it is true or correct according to what you have presented, I'm going to give you an opinion. If you remember, yesterday I was talking to you about ITC paying license fees, pension hedges. That is some kind of an examination rate. I'm not seeing your financials, but I'm seeing your the report that says what has been your monthly sales. And according to your monthly sales, what should be the amount that you should pay as license fees to the pension and hedges? And you're certifying it to the RBI that yes, this was the sales, this was the license fee, this is the equivalent money that has to be repatriated out of India to a foreign guy, right? So that's examination. Then we have something called reviews. But here, remember, this is for non-issuer, right? We are still, the key word here is non-issuer. 1 second. Uh, mostly Vishnu, right? Vishnu's question is, are auditors and CPAs used in the same context? Not always, but many times. Okay. But if they are not doing the audit function, then you don't refer to them as auditors, you will refer to them as accountants. So it's not that it is completely different, but many a times, if let's say they give you a report, you should be very clearly seeing that if they use the word accountant, then ideally this guy may not be doing the examination or the assurance part. That assurance will not be probably be given. So review is the term we'll be using for two things. One is to be for non-issuers. Again, we'll use review, but this is for issuers now. So for issuers and the non-issuers, the review would be different. But also for review can be of a statement, not a historical financial statement. Okay. So that also you have to be careful about. So we'll see how these reviews work. And then in the end, we have agreed upon procedures. You want me to do X, Y, Z, I will give you X, Y, Z. I will not do any kind of an assurance. You will tell me what steps to do. I will do those steps and then I will give you my report of findings. That you wanted me to do step A, A1, A1, A2, A3. I did A1, A2, A3 and this is what I found. So this is not an opinion. This is called the list of findings. So this is the outcome, guys. Outcome of what you have done. This is what are the permissible engagements that you could be asked to do when you are engaged as a CPA.